Hello all, welcome to this video about Semler Scientific, a company that we invested in last year. And as always, we have created a small presentation of why we think the company is good. And we'll take a look at that now.
Right, to kick us off, let's take a look at what Semler Scientific does. So, Semler Scientific is a business that operates in the healthcare industry. It was founded back in 2007 and is based in California. Their flagship product is called the QuantaFlow, and this is a device that a doctor will put on a patient's finger to measure blood flow in the arteries. The QuantaFlow also helps to diagnose cardiovascular diseases and heart dysfunction both quickly and accurately, and is cost efficient. Therefore, that makes it good for the patient due to the quick diagnosis method, and it's good for the doctor, again, due to the quick diagnosis method and the low cost. So in short, it's good for both parties. And in addition, Semler Scientific markets and distributes a product called Insulin Insights. So this is a software product that will recommend the optimal insulin dosing for diabetic patients in the US. And here in this picture, you can see how the QuantaFlow device is used to take the blood flow measurement. You can see there in the green, and it's being clamped onto the patient's finger. And here is an example of how the software shows QuantaFlow's measurements. And now let's move on to the next section.
So let's move on to why we invested in Semler. So to put it very simply, it's a high growth company with very good financials. And it basically has no debt. It currently has 0.3% total debt to equity ratio, so virtually zero debt. And when we invested, it was selling at a good price. So with that being said, let's actually go into the financials and look at them one by one. So here we can see the revenue growth, and we can see that it's very high, and the company is growing very fast, which we like to see. Secondly, we can see that net income has grown a lot, but it's very important to note here that net income was negative up until 2017 because this is such a young company. But then after that, net income has been quite positive. Now, this is a little bit different for us because we tend to invest in companies with a longer operating history, but we felt that Semler was such a good opportunity that we wanted to invest nonetheless. And then moving on to net margin, it sort of tells the same story as net income. We can see that it's very negative up until 2017, but then after that, we can see that in the years hence, the net income margin has been very good. It's always been above 20%, and even in the 30s and 40s in two of the years. And we like to see a net income margin above 20%. It tends to show that the company has a good product and is able to charge a high price for the product, and that customers are willing to pay for it. Now let's move on to our investment. So we like to invest in companies with a long track record of consistently growing net income. However, Semler is a young company with only 5 to 6 years of positive net income. Now, as I mentioned earlier, that made us a bit hesitant to invest, and we therefore only invested 1% of our model portfolio in the stock. So, 1% is not a lot of money and won't make really a huge difference, but we wanted to treat it as sort of as a test. We wanted to have some money at play, but we didn't want to kind of invest too much into the company. And I say invest, but in reality, we did not invest any of our real portfolio in the stock because it was not available on our trading platform. Because Semler is a small US company and we are not based in the US. So when we tried to find the company on the platform that we use, we actually, it wasn't available. So we weren't able to put our own money to use, even though we wanted to. But we bought shares in our model portfolio at $22.9 in early February 2023. And based on our valuation models, we believe that the company was worth around $50, if not more. And here is a chart where you can see how the share price has developed since we bought shares. So we were aware of the company in early 2023, but the price was too high for us. And then suddenly it dropped a lot. And then we were able to buy shares at a price that we thought was really good. And then since then, it has been slowly going upwards. Now, this is obviously only about 10 months of history, so anything can happen after that. But it's interesting to see that it seemed like the market overreacted with that big drop, and then it has been slowly climbing up towards that ever since.
Right, with that being said, let's have a look at the risks. So, firstly, due to its short operating history starting from 2011, we don't actually know how Semler would perform in a recession, such as the one back in 2008. And we don't know how the demand for their product would be impacted in such times. Secondly, while Semler does have high and growing revenues, the bulk of this is generated by only a few clients. So if you look at the year ended the 31st of December 2022, there were only two customers that accounted for around 40.4% and 29.0% of revenues. So if Semler were to lose any of these high ticket clients, then it would impact the revenues very negatively. And then the final risk here is for Semler is that they predominantly market only one product, so namely the QuantiFlow, which is the blood flow measurement device that we'd mentioned earlier. And the QuantiFlow may not achieve broad market acceptance. So if it turns out that a few years from now that the market wasn't interested in this product, then Semler's share price could fall considerably. Or if their patent is successfully challenged, then competitors could easily move in on Semler's market. And thus concludes our overview of Semler Scientific.
Thank you for listening. Bye.
Bye.